Good morning from my world headquarters in New York. I'm Manus Granny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Israel carries out limited raids to Gaza for a second night, while U.S. military strikes two Syrian facilities it believes were linked to Iran, who warns the U.S. won't be spared if Israel-Hamas war spreads. Amazon and Intel bring fresh optimism with strong earnings results after weakness from their peers drags the Nasdaq 100 to correction territory. Stock futures edge higher pre-market. And Treasury Secretary Janet Yellen says the surge in bond yields is due to a strong economy, not widening fiscal deficits. This as the market awaits a read on U.S. inflation after the GDP data showed resilient growth. Good morning. As Danny Berger just said in the commercial break, if you welcome in the bots, if you welcome in AI, you will be rewarded. That's the story of Amazon. We dipped into correction territory and we've managed to eke out a nice bounce up of over 1%. Are you rebalancing your portfolio? Do you take advantage of the 10% drop? Do you take advantage of the quirks of pricing in reporting week in Magnificent 7 to reposition? We're up over 1%. Amazon bounces, as you can see in trade yesterday. We gave back 1.5% this morning, but the cloud sales were enough to keep the goblins away, as one analyst said. JP Morgan has run the numbers. 78% of the S&P is in, and they have beaten on the earnings per share. S&P 500 never quite made it to the correction territory. Let's see what the PCE deflator is today. That GDP number yesterday was absolutely spanking hot. And the question is, of course, how strong is the consumer and the durability as many companies raise prices, from Netflix through to a lot of the food companies as well. Stock 600, you're looking at a gain of 0.2%, which belies something very, very important. Both Electrolux and Remy Cointreau are being brutally taken down this morning. Electrolux warning, this is a huge Swedish home appliance company, warning on the growth forward, down 10% on that. And Remy, if you thought we weren't buying champagne and fine wines from Louis Vuitton, Remy Cointreau says the Americans, they're not buying that beautiful cognac in the same size. And again, that stock is at a 3-year low, down 10.5% on Remy Cointreau. Good morning, Danny Berger. Are you Cointreau or champagne?
Probably more champagne, I would say. I don't drink cognac, I'm going to be honest. Sorry, Remy, I was never an American drinker of any of your products. My apologies. All right, Manus, so I know earnings are dominating the equity story, but cross-market, it's the escalation risk. With the latest out of the Middle East, the latest out of the U.S., looking at strikes at Syria, looking at Iran, warning about the U.S. should there be an escalation. Brent crude bid higher on that. 2% is where the gains are. Bloomberg Intelligence says that the risk, the war premium, puts a fair value at $95 a barrel for Brent crude. U.S. yields, those go higher 2 basis points. Manus, the buyers were out yesterday. They disappeared today. They're out yesterday despite that stronger GDP data. We also had the strongest 7-year auction since COVID. And then finally, strength coming from the yen. Finally, some relief. But is it on a good story? You had hotter Tokyo inflation. What does that mean for the BOJ when they meet and have their decision next week on Tuesday? Manus, I do want to get back to the alcohol, not my drinking habits, but of Americans in general, because it is this head-scratching thing, right? They're not buying expensive things except maybe for Hermes bags. But then you look at that GDP data. Spending was really strong. And to this, I want to bring in Paul Donovan's quote from UBS. He wrote this to clients this morning. I really love this, and I feel like I'm allowed to say this as an American because I know my own shopping habits. He said that when the economic history of the early 21st century comes to be written, the opening sentence in a bold font should be, never go short the hedonism of the U.S. consumer.
I love that, the hedonism of the consumer. And it is very, very real. The question that goes through my mind is whether we are at the end or somewhere near the end of that revenge tourism, revenge spending. Have we all just spent a little bit too long on the Ibiza beach at the end of the summer at the closing parties? And will that beauty of the sunset fall? But the hedonism of the U.S. consumer is true when you look at what's happening with Electrolux and with Remy and with Louis Vuitton, all on the European side. So again, it is about King USA. It's about the differential of the U.S. to Europe. That is something that we will debate as we go through the rest of the morning with Janet Henry. But, Danny, let's return to our top story. Israeli troops are exiting after another raid into Gaza. The European Council President Charles Michel spoke in the last hour on the risk of escalation.
are all aware that this situation is extremely dangerous for the region and for the world. And that's why we are so active to try to avoid facing a regional escalation with a risk that Iran get involved directly or through proxies, which would make the situation much more difficult. And I can tell you that when I was talking with many leaders of that region, they were drawing their attention on the importance to work together in a coordinated way to prevent the risk of regional escalation.
Meanwhile, the U.S. says it has hit 2 facilities in eastern Syria it believes were used by Iran's Islamic Revolutionary Guard in what it calls self-defense strikes. Bloomberg's Middle East and Africa anchor Yusuf Gamal al-Din joins us now. Yusuf, take us through the latest 24 hours maneuvers by the troops.
Well, Manus, as you mentioned, these were in self-defense, but this is a key message from the U.S. Defense Secretary. When the lines dropped around 6 a.m. Dubai local time, we weren't quite sure how significant this latest move was. But now looking at some of the market reaction, but also speaking to some of the sources, it is clear that this is another theater, another front within the region. Remember that some of Iran's proxies, we understand, had attacked U.S. military assets. This was on October 17. And so now the U.S. not just responding, but it's also sending out this message that it is not acceptable for any U.S. military assets to be attacked. And there was always going to be an answer, even though the Americans are making it clear from their part that it is distinct from Israel-Hamas. Whether it is or not, I'll let others determine that. But we also had some very aggressive rhetoric out from the Iranian foreign minister, who basically said that there is a large risk of further escalation and that the violence needs to stop. But again, the UN General Assembly yesterday was a cocktail of very sharp words and not a safe place for a lot of people on the sensitive side, that's for sure.
And I mean, the efforts for diplomacy, they continue, Yusuf. We have EU leaders meeting in Brussels today. Can we expect any more efforts for that type of diplomacy, for that type of humanitarian aid?
That's absolutely critical. Something the Europeans have been struggling with is coming up with a united stance. So even though there is an official EU view, underneath that, there's quite a bit of debate around not just the humanitarian side of things, but a humanitarian ceasefire, to what extent Europeans should stand on any particular side of the debate. So if anything, it will help. Whether it's going to bring others around the fold or in the Security Council and really bring an end to the terrible violence that is unfolding, because one thing's for sure, the aid that is coming in is still not sufficient and fuel isn't coming in at all, and they're going to run dry and hospitals are going to stop working within the next few hours, guys.
Yusuf, thank you very much for that update. That's Bloomberg's Yusuf Gamal al-Din, Middle East and Africa anchor. All right, let's turn to tech now. Amazon delivered a beat on third-quarter net sales, but it did have a narrow miss in sales for its cloud computing unit, AWS. Joining us for more is Matt Bloxham from Bloomberg Intelligence. Matt, I thought the discussion you and I had been having over the past few days was that investors were being scrupulous. You miss on something like cloud, you're not going to do well, but looking at Amazon up nearly 6% in the pre-market.
It's interesting, isn't it? Yeah. I mean, that miss was incredibly narrow. And I think what overshadowed that on the positive side were two things. One, the commentary from the CEO about this wave of AI demand that's coming through that's going to fuel kind of subsequent quarters. And the second point was the profitability. AWS and Amazon as a whole shot through expectations, 45% beat on operating income in the quarter, getting really good traction on the reorganization of their online fulfillment service and the cloud business benefiting from scale and lower energy costs. So I think a combination of those comments and the cost management boosting the margin were enough to let people see the positive side.
Matt, of course, it does come down to where they go. I think Danny said if you've got the bots in your results, you're grand. I mean, you know, Microsoft obviously living vicariously through their deal on AI. Amazon, what are they talking about for next year? What else have they said? I mean, we'll get to Intel in just a moment, but anything about next year from them?
Yeah, well, so I think specifically on AI, they talk about kind of three layers of the AI opportunity, and that they're investing to gain revenue in each of those areas. There's the underlying kind of compute level training models where they're developing their own silicon. There's the middle layer of essentially being a host for large language models, and they're introducing things like Meta's open source Llama 2 there. And then on the top end, you've got this kind of concept of like the kind of applications and tools and sit on top, so co-pilots, and they've got this particularly successful coding co-pilot that's getting traction with clients. So that they've got products in all of those areas, and they see a huge amount of opportunity across all of them as corporates continue to spend on their AI capability.
Manus, to be clear, I was saying we need to welcome in the robot overlords. It's not just the bots, it's that they're going to take all of our jobs, and if we want to be successful, at least in investing, we need to accept that reality.
I don't accept that reality. Matt Bloxham does not accept that reality.
You're irreplaceable, both of you. Hey, Matt, can I ask you about Intel quickly? Yeah. So on Intel, investors seem to be pretty happy.
Yeah.
Sales growth coming back?
Yeah, maybe next quarter. So it's a turnaround story. Actually, sales this quarter were still down year on year, but a really positive outlook for Q4, well ahead of where consensus is. What's mainly driving that is a stabilisation in the PC market. That's been softer recently. Inventory levels have been run down, so clients are now restocking inventories. That's helped demand there. That was the big beat on revenue in this quarter. And again, the CEO kind of giving a very positive update, essentially where all the different elements of their turnaround story are, and investors kind of liking what they see in the numbers to support that.
Okay, Matt, thank you very much for joining us every day this week. Matt Bloxham of Bloomberg Intelligence. He's been a busy man. We're also going to be speaking to Thiago Kapulskis, head of global tech research at Itau, later this hour to dive more into the story. Let's get you some other top stories that are trending on the terminal this morning. China's former premier Li Keqiang has died from a heart attack at the age of 68. Li served as the #2 to President Xi for the last decade, overseeing the nation's economy. The news comes as China's industrial companies are seeing profits rise in September for a second straight month.
Well, the FTX founder, Sam Bankman-Fried, is taking to the witness stand in a dress rehearsal before he testifies to a jury. He reportedly struggled to answer the questions he was asked, spending almost 3 hours trying to convince the judge to implicate FTX lawyers.
And price war no more. Tesla is raising the price of its Model Y performance SUV in China by about $2,000 US. It's reversing its decision to reduce prices back in August. It's part, of course, of the so-called price war in China, with manufacturers vying for a bigger share of the world's biggest EV market.
Well, coming up, we're going to catch up with Janet Henry, HSBC Chief Economist. She is with Danny I next. What does she make of the hedonism of the US consumer? Will it endure? Right here on Bloomberg.
What's your view on what is driving that surge in yields, and how much of it is connected to investors' concerns about the U.S. deficit?
Well, I don't think much of it is connected to that. We're seeing yields go up in most advanced countries. Part of the increase in yields, I think, is simply a reflection of the strength of the economy.
Treasury Executive there, Janet Yellen, joining us now is the Global Chief Economist, Janet Henry. So it's amazing how she vaults from being the head of the Fed to the head of Treasury, and suddenly deficits, it's nothing to do with deficits. The Italians are worried about deficits, the bond traders are worried about deficits, the bond traders are worried about deficits, but Treasury Secretary isn't. Are you worried about the size of the US deficit and how much it costs them to fund it? Good morning.
Good morning. I'm worried about, I'm an economist, it's my job to worry. I worry about deficits, I worry about debt sustainability. We know that the burden facing governments in terms of the array of spending needs that they will have in the coming years, we've listed them many times in the past, from defence spending to energy transition to age-related spending, not to mention the interest rate costs. But I also agree with Janet Yellen. I think a lot of the move in bond yields is associated with the realization that the US economy has been more resilient, that short rates, even if they have peaked, are going to stay high for some time, And you can actually get a pretty high return at the short end. If you are going to take on a bit more duration risk further down the road, then yes, fiscal dynamics will play into that as well. So I agree, both are at play, but recently I think it is more about the strength of the US economy.
And on that strength of the U.S. economy, our viewers won't know, but I asked Janet Henry during the break whether she says hedonism or hedonism. Let me tell you why, Janet, because you probably had no idea why I said that. It's a quote from Paul Donovan over at UBS, and he talks about the strength of the American consumer. He writes that when the economic history of the early 21st century comes to be written, the opening sentence in bold font should be, never go short the hedonism of the U.S. consumer. I say it like an American because we're talking about... But if we're talking about the American consumer, maybe we got to say hedonism, Janet. I don't know. So help us settle the debate.
Help you with that debate. Someone from this side of the Atlantic, I would call it hedonism. But I think that the point is well made. It's how US consumers, their attitude towards spending differs from Europe. And certainly the experience of the past few decades would be that the US consumer does not stop spending before they absolutely have to. But I think what we also need to bear in mind when we look at the US consumer at the moment is that spending is very, very unequal. The fact is you can see evidence of tightening monetary policy in those people that tend to spend a lot on credit cards or on auto loans. That's where you're seeing rising delinquencies. Credit cards, you may be paying 20% plus in terms of interest rates. You're seeing a lot of pain, but you have got much higher income groups where they're not adjusting their spending to the same degree. And the other point I would make about the difference between the US and, say, Europe is still that savings story. It's not just the excess savings, how much has been spent, how much has been invested. Just look at the savings rate. Look at Germany, 12% household savings rate, higher than pre-pandemic. Even the UK, it's high single digits. US consumers, pre-pandemic, it was running at 8. Recently, it's been more like 3 or 4. So actually, yes, US consumers, at least on aggregate, been quite willing initially to draw on their savings and run down their savings rate when real incomes were being squeezed. And now, actually, wage growth is higher than inflation. So that's helping to stabilize. And don't forget that strong labor market release we had recently out of the US as well.
It's just the Americans are prepared to pay more for the sunbeds in Mykonos, perhaps, than the Europeans. I go broad church with that. I've competed for sunbeds in Mykonos. I want to talk to you briefly about wages, because you say this is the tipping point. You see Ford withdraw their guidance, GM withdraw their guidance, 25% pay rises in the auto workers. I know that is just but one area, but you are concerned about the stickiness and the endurance of wage rises, and that could be the tipping point for central bank next year, couldn't it?
Yes, absolutely, it could. And I would say on your point on Mykonos, it's not just the holidays. That US consumer spending, surprisingly strong resilience on the goods side as well. But you're absolutely right. I think the issue we have at the moment, we've got to remember that inflation has been above central banks' targets, and big time above central bank targets, for over 2.5 years. Now, the higher inflation goes and the longer that it stays above target, the longer it is going to take to come down towards target. We know that. Economic theory actually tells us that. And I think the difficulty we have at the moment, remember, is that recently, initially it was on the back of Saudi supply cuts that we had that big rise in oil prices. So that's adding volatility. We are seeing impacts on food prices globally, not everywhere, but we have got greater frequency of extreme weather events. That's adding to the volatility of inflation, and it does impact on price setting and wage setting behavior. So that could be what ultimately means that they have to, if necessary, not just keep policy tight, but actually raise it down.
Yeah, it's that next leg being the most difficult one. Janet, thank you so much for joining us this morning, for putting up with Manus and me. That's Janet Henry of HSBC. All right, a quick check on bonds this morning. We are selling some. Bank of America with a fresh note out saying that the bond bubble has popped. That means that we're in a big, fat trading range, but there will be no rally, no secular bond bull market till D.C. is serious about fiscal discipline. Getting back to what Janet Henry was talking about on the fiscal concerns. This is Bloomberg. Welcome back to Bloomberg Brief with Danny Berger and Manus Cranny. Manus, there's a new billionaire. This is what we call public service journalism. The data aces at Bloomberg have looked at Taylor Swift's earnings and her assets and have decided she is a billionaire. $1.1 billion to be exact. If anything, I mean, this is just very rare for someone who only does music. Usually celebrity billionaires have a clothing line, a makeup line. This is something like this. But here you go, Taylor Swift, a billionaire in her own right.
Well, just if you break that down, $400 million from her music since 2019, $370 million from tickets and merchandise, and $110 million from property. 5 properties that she has. But there's a lovely line in there that essentially she's almost like a mini conglomerate, and the power that she has to literally convene people and convene in music concerts is pretty surreal. It's a bit like when people convene on the Brief, Bloomberg Brief.
I wish we had that kind of power, but you and I can't support an American economy. I fear, Manus. We don't have that kind of power.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Israel carries out limited raid into Gaza for the second night, while the U.S. military strikes 2 Syrian facilities it believes were linked to Iran, who warns that the U.S. won't be spared if the Israel-Hamas war spreads. Amazon and Intel bring fresh optimism with strong earning results after weakness from their peers drag the NASDAQ 100 into correction territory. Stock futures edge higher in the pre-market trade. And Treasury Secretary Janet Yellen says the surge in bond yields are due to a strong economy, not a widening deficit. This as markets await the latest read on U.S. inflation after GDP data showed resilient growth. Manus, it is this fear of escalation that is ever present in this market, despite what is ever happening outside of it with earnings, with bond concerns. It is Brent crude that is the read we get on that. Now up nearly 2.5%. It's at the high for the morning. I just mentioned there those warnings from Iran being present in the market. Bloomberg Intelligence says that $95 a barrel is fair value if you take into account the geopolitical risk premium. Meanwhile, we've gone back to selling bonds. We were buying bonds. The bears emerged from their cover yesterday. Despite that fact, we had a stronger GDP. Janet Henry was talking about the strength of the consumer. At least on an aggregate level, folks are willing to draw down on their savings to spend, unlike Europe. Hence, you get GDP data that shows a very strong consumer, despite the fact we're not buying Remy Cointreau. Yen, finally some strength here. We had some strong Tokyo inflation figures coming out, stronger than expected. And we also have the BOJ decision next week. We're still above 150, though, on dollar-yen, Manus.
Well, Danny, of course, we're going to debate that bond market through the rest of the morning. Janet Henry from HSBC agreeing with Janet Yellen, of course, that it's not about deficits. It's about the strength of the economy, the strength of the consumer spends on, and AI is king. Amazon helps lift the tide of the NASDAQ this morning. We dipped into correction territory yesterday on the NASDAQ 100. Amazon really pumping higher this morning. It's enough in their message on the cloud. Sales up 12%. It's enough to keep those gremlins and the goblins away from that market. JP Morgan have run the numbers. They're looking at earnings. There's Amazon at 6% at the moment. 78% of the S&P 500 have beaten on their earnings numbers so far. Will that endure? Given the GDP numbers yesterday, given the strength of the U.S. consumer, Danny, it's going to be a fairly robust set of earnings. Goldman Sachs, however, have trimmed their outlook for dividends going into 2024. They say it will be 4%. The long-term dividend for them is at 5%, which is pretty much where your long-term bond is. Now, when it comes to understanding the difference in consumers between the United States and in Europe, you just have to look no further than Electrolux and Remy Cointreau. They define the two different markets in very, very clear ways. What you have is Electrolux, the home appliance maker, really doing much worse than estimated in terms of their guidance as well, down 11%. And then Remy Cointreau is at a 3-year low. Sales will drop by 15 to 20%. We're here in the United States of America. But the point about it is this: how strong is the consumer to take price rises from some of the tech companies, from price rises from Coca-Cola and Netflix versus the pricing power within Europe? Danny, good morning.
Good morning, Manus. And this is the confusing thing, right? You have companies saying that there's weakness in the consumer. We also had JPM saying that companies are flagging lower consumer demand more than usual. But then you have people making Taylor Swift a billionaire. You have GDP data that's really strong. It's a head scratcher.
Look, it absolutely is. I would still put it to you, and I think Janet Henry helped us understand this. The proclivity to spend in the United States of America is much harder. It takes a lot harder to get your average U.S. consumer to pause, right? Or will we run out of revenge spending, revenge tourism? Have we all just spent too long at the Sunset Bar in Ibiza? That is the question. We got to pay the tab. You got to pay the tab at the end, and I can tell you, the Ibiza Sunset Bars, they're pricey.
I was going to say, Manna, speak for yourself. You can see how pale I am right now. You can tell I have not been to an Ibiza Sunset Bar.
Yeah, you've had no time off this year, have you? None. Thank you.
Okay. I won't comment on that. I have been silenced. Okay, let's turn to tech, which is going to save me from this. Amazon, it posted stronger earnings in the third quarter. CEO Andy Jassy expressed confidence an economic downturn wouldn't harm the tech giant. Take a listen.
While we see companies being more cautious on the ad side in the top of funnel products, things like display and a little bit of video, we're still seeing a lot of strength in the lower funnel ad products. Even in a harder economy, there's going to be a lot of e-commerce purchasing.
Joining us now is Thiago Kapulskis, head of global tech research at Itau BBA. He has an outperform rating on Amazon and a price target of $200. Thiago, thanks for joining us. It's been a bruising quarterly results for tech, and then comes Amazon. Pre-market, those shares are up 6%. They miss narrowly on cloud. It feels like investors have been punishing tech companies maybe for less this quarter. What do you make of the warm reception?
Yeah, no, I think you're right. So, first of all, thanks a lot for having me here. So, look, it's been brutal, right? I mean, the stocks that were supposed to do well, they did a little bit well, like Microsoft, and the ones that didn't deliver that much, like Google, they went down a lot, right? So, really rough season. Asymmetry was not that good. I think positioning investors were hiding probably in big tech, but fortunately, at least last night, Amazon gave good news to people that were eager to hear, that something could come better actually this season.
When you cast forward, when we look at this sort of the Magnificent Seven, and you look at the clutches of these companies, how important, and I'm a bit obsessed by pricing at the moment. If I look at Amazon, Microsoft, and Google being able to raise their prices. They've got the cloud. Then I look at the pricing of Apple and Netflix putting through prices. How important is that to margins for the likes of Amazon?
Yeah, it's a good question. I don't think it's, well, I think the story on Amazon in terms of margins is more about them improving, their operational mode. What I mean by that, the regionalization strategy that they're doing on the e-commerce side, that's been really helpful to results. I mean, we had the opportunity to speak to Amazon recently, and the message was just very positive, and it's really coming to results, right? So what they're doing basically is that optimizing the whole logistics and fulfillment, etc. After investing so much during COVID, they're able to get better transportation, less gas actually spent to deliver products and all of that, and that's been actually a much more important driver versus, for example, prices higher or something like that, which is more important actually on the likes of Apple.
Well, Thiago, you away from some of the individuals of this, the overall picture, you wrote that investors are on a very high stress level overall. For those of us who can't meditate, what is the tonic to that stress? How do you position yourself to save yourself maybe some of the volatility we've seen?
Yeah, that's a great question. I think at the end of the day, when it comes to invest in everything and all these names, I think like if you have to hide somewhere, I would say it's Microsoft, or at least that stock that you can buy and sleep better, I would say, right? Even though it didn't work. For example, yesterday the stock went down quite a lot. or not as it didn't do as well as we expected. So it's been really tough. I think very rough year. Like a lot of institutional investors that I know, they're not doing very well this year. And last year was not very easy. 2021 was not very easy as well. So really rough environment. But I would say that institutional investors are hiding, right, in those good quality, long-term stories, companies that are clearly delivering. And the case of Microsoft, I think this specific season was actually very good. And but I would say also that investors that are still chasing or want to be a little bit more aggressive or something like that, Amazon looks still a good name. So
okay, so Microsoft is for defense. You've got a target there of 425. And if I'm feeling frisky, I should maybe take a little bit of Amazon on. And when you look at cloud, it's such an ethereal kind of like term to a lot of people who are tuning in. Who has the strongest cloud offering? Because if I only want to own, do I own just one cloud proposition, or should I have a multi-strategy? Who's the strongest?
Yeah, no, great question. I think from a business standpoint, I think all of them have great products. I don't think it's just a matter of like you're picking, for example, Azure just because it's better. I think it's just for some use cases it's better, or it's easier. For others, AWS is better, it's easier, etc. Right? So,
but
it's
Thiago,
not that,
can I jump in here?
Yeah.
Because I started the show by telling Manus that he needed to accept our robot overlords. How much of whether or not your cloud business is successful is about that? Who's using AI the best?
Oh no, I have I would say, a stronger opinion. I think it's Microsoft. I think the fact that they invested in OpenAI so early, right? So I remember like in 2020 them talking about OpenAI in conference calls, just that people didn't realize that could be such a big thing, right? So I think their offering today is actually, I would say, better. I think the numbers are showing that 300 basis points of growth already this quarter coming from Azure, right? From AI, sorry. That's great, and that's only on Azure. They have Copilot and everything. So clearly, the first one there, guys.
Okay. Thiago, another tick in Microsoft's box, I suppose. Thiago Kapulskis, thank you so much for joining Manus and me this morning. Coming up, it's a big day for big oil. Chevron and Exxon both report after the bell. We'll have the details for you next on Bloomberg.
We think that the oil price will move within the levels we have seen over the last months. But again, very, very difficult to predict the price level at these days, with small incidents creating big spikes.
Part of my conversation there with the Equinor CEO, Anders Opedal, is energy earnings continue to roll in. For their part, they did well on commodity trading, given that there's a lot of volatility, and geopolitics continues to roil this energy market. Oil prices are pushing higher as tensions build in the Middle East, with another Israeli raid in Gaza and a U.S. attack on Syrian facilities. Let's bring in Bloomberg's Julian Lee for more on this. Julian, prices are higher by more than 2% today, but just on a weekly basis, oil is lower. How much of the daily moves are sustainable when it comes to some of the geopolitical tension?
I think the moves upwards are only sustainable if the tensions remain high and if those tensions continue to rise. I mean, I think that what we're seeing is a market that is perhaps fundamentally weakening to some degree, being propped up on the physical side by OPEC plus output cuts, and on the geopolitical side by the rising tensions in the Middle East.
In terms of the tightness of the market, I'm curious to get your take. We're looking at Cushing We're looking at global inventories, the lowest in a couple of years. So that is a tightening market, which OPEC Plus will welcome, because we just simply don't know where this war goes to.
No, we don't.
We don't. So does that tightening, that physical tightening, that draw, does that create a floor for OPEC Plus? The market's doing for OPEC what the journey that they set out.
Well, I think, yeah, and I think a lot of this is due to what OPEC, or let's, cut to the chase, Saudi Arabia has done in cutting 2 million barrels of supply and extending those cuts to the end of the year, and potentially, they could extend them further still. That's taken a lot of oil out of the market, which has tightened that balance. But within that, we are seeing refinery margins weakening. So this is the earnings of refiners who are turning the crude oil into the fuels that we need. We're seeing shipping costs rising, so that's making it more expensive to deliver crude, for example, from the US elsewhere. That's putting pressure on physical markets, and that is undermining some of the strength that OPEC is trying to create.
I also, when Manus is asked about the floor, I also want to ask about the ceiling as it relates to the economy, to demand weakness. How much of that are we seeing from concerns, about a minute here, Julian, from Europe to China to the U.S.?
Yeah, we are certainly seeing concerns about demand weakening. We've had some very poor figures coming out of some European countries. I think one of the particular weaknesses was diesel use in France, a major European consumer. Gasoline use in the United States has also been looking pretty weak. There's been talk of, are we going to get demand from China as it rebuilds stockpiles? I don't think it will rebuild those stockpiles at this level of prices.
Okay. Julian, thank you very much. Great to talk with you this morning.
Pleasure.
That's Bloomberg's Julian Lee. Chevron and Exxon, we should say, are reporting their earnings before the bell. Don't miss our interview. Exxon CEO will join the team at 10:30 a.m. Eastern. That's Darren Woods. All right, let's turn to Europe. Manus and I have talked about it today. Remy Cointreau falling to a 3-year low. The French distiller cut its annual sales guidance, weaker than expected U.S. demand for its high-end spirits. Joining us now is Bloomberg's Andy Hoffman. Andy, I said this to Manus, I want to know what Americans are drinking. They're not drinking LVMH's champagne, and clearly they're not drinking cognac either.
Clearly they're not. This was quite a brutal report from Remy today. And as you said, they've had to cut their annual sales forecast. They previously were saying sales would be flat for the year. Now they're saying they're going to be down 15 to 20%. That is a huge shift in guidance. And indeed, it is the U.S. that is the problem. The consumer there was quite enthusiastic about high-end spirits, products like Remy Cointreau's cognac during the pandemic. But things are normalizing now, if not going below normal. And so what we're seeing is that, the sales in the U.S. are really drying up. They were down over 50% during the second quarter.
So what is happening in the U.S.? I mean, we saw numbers from Louis Vuitton telling, Danny, I don't know what, she doesn't drink cognac apparently, so I've got her down for Veuve Clicquot. Maybe she's probably
I'm trying to be healthier.
She's probably more expensive than Veuve Clicquot. I've got her down in the sort of the reserve basket. But what's happening here in the U.S.? Because cognac, is it pricey? What is it that's perhaps shaking the market a little bit?
Yeah, I think it's price. I mean, obviously, distillers like Remy and others have been taking price because demand for pricey spirits and other alcohol products surged during the pandemic. Now, obviously, consumers there are a little more cautious. What's also quite key here, and that Remy flagged, is that the higher interest rate environment has stopped retailers or constrained retailers and wholesalers from destocking. So they can't borrow as much to buy the product, and that's having a huge impact.
Hey, Andy, only 30 seconds here, but I mean, can the company even do anything to offset this kind of drop in demand?
they're going to stick to their plan. They're going to cut costs as much as 100 million euros, the chief financial officer said today. And they said they're not going to get involved in what is a promotional price war that's happening, particularly in the U.S. They're not going to cut prices, and they're not going to spend on marketing. They're going to cut costs and wait for the recovery, which they now say won't happen until next year.
Okay.
They previously were saying it was going to happen the second half this year.
All right, Andy, thank you very much. That is Bloomberg's Andy Hoffman. Manus, let's quickly whip through some of these European earnings. NatWest, bruising session. The higher rates are increasing customer deposits. It's a story we've heard before.
Yeah, and on a few others on the board there, you've got Equinor. Well, Sanofi's third quarter earnings miss certainly hasn't helped the sentiment. Equinor, higher oil production, and trading unit helped the third quarter profit beat, briskly up 3.25%. It's a big day, Danny, isn't it, in terms of the other major oils that are reporting today in the USA, right here on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York, but he's left me for these few minutes to go set up with team surveillance for the next few hours. Okay, let's take a look at what's ahead. Get you set up for your trading day. Big oil earnings kick off. Chevron and Exxon both report before the U.S. Open. It's the first round of results after both firms announced massive M&A deals. Then Sam Bankman-Fried is expected to testify in front of the jury today as he attempts to defend the fraud charges against him. And President Biden will meet with the Chinese foreign minister when he visits the White House today to try to lay the groundwork for the leaders' meeting next month. That is expected to happen in San Francisco. Okay, let's get you the read, pre-market read, as we inch ever closer to the U.S. Open. We're going to get Chevron and Exxon earnings. Big oil is having a big day. In terms of price movements, just because the price of oil is moving higher, that is helping them. But keep in mind, Chevron and Exxon, as I mentioned, they both announced mega deals. The mega deals are back, at least for them. It will be interesting to see their forward guidance given the new giant companies they have become. The rally in big tech that also continues. Both Amazon and Intel up at least 5.8%. Thanks to Amazon, we have a silver lining finally for this earnings season. It has been bruising for big tech. We were just talking to Thiago Kapulskis, who told us that Microsoft is where you want to hide. That is the strongest cloud business, especially when you integrate AI into it. Let me show you what oil is doing. I mentioned this in terms of the macro movers. This is the one to keep your eye on today. 2.33% is where we are for NY crude. Brent crude above $90 a barrel. Bloomberg Intelligence says fair value if you take into account the geopolitical risk, the geopolitical war premium. It's at $95 a barrel. There's concerns about escalation abound, but oil still down on the week. All right, that's it for Bloomberg Brief. Manus Cranny will be back in just a few minutes with the surveillance team. This is Bloomberg, and a happy Friday.